Home with Charlie video, I have with me a very seasoned and experienced former estate agent who began his career in estate agency in the 1960s. He saw the 1970s depression, the 1990s recession, and actually managed to start up a successful estate agency. But he's now retired out of that game, which means you can take his advice at face value because he's not trying to sell you anything. So John, welcome. Thank you very much for coming. This is John Durrant. I would like to ask you on behalf of particularly first-time sellers who have perhaps never before encountered a property market downturn and what it can be like, and to ask you your advice for people who are either already on the market but not finding a buyer, or about to come to the market and wondering, what do I do if I've got to sell my property in a downturn? How do I go about finding an agent that's not going to let me down? It's an agent that's actually going to get my property sold when I need to sell it for life reasons.
Yeah. Okay. Well, you've got advice of people who have done it locally to you. Trying to find the right estate agent is a difficult thing. You have in the estate agency industry, estate agents who are inexperienced, and estate agents who are very few estate agents, I would say, who are untrustworthy, who will tell you whatever you want to hear in order to gain the instruction. The untrustworthy ones tend to be the ones who want a 6-month sole agency, and who will tell you what you want to hear to get instructed, and then take 6 months to sell the property, during which time you won't be able to instruct anybody else. And what they will do is chip away at the price until it comes down to what the other estate agent was telling you in the beginning. So that's one of the easiest things you can do to determine who is trustworthy and who isn't.
Okay.
So
may I just recap that point? So what you're saying is that actually a really good trust indicator is that agents who are confident in their ability won't try and lock you into a long-term sole agency contract, and those who are confident in their ability are going to take your instruction on, but you'll be free to leave with perhaps a couple of weeks' notice. Is that right?
Yeah, that's exactly right. I mean, if what people tend to do is they tend to get 3 or 4 estate agents out, and those estate agents will give them advice about what they think the property is worth. A lot of estate agents will give very high valuation, marketing appraisal on a property. Others will give what they think is a truthful figure. They both might think themselves truthful. This is the difficulty. As I said, just because somebody gives a high valuation doesn't mean that they're being deliberately misleading. Could just mean that they haven't got their finger on the pulse of the market quite well. But I think what the test really is, as I said, to make sure that you are going to be able to jump ship with that estate agent, and go to another if you feel that the advice hasn't actually resulted in anything. So definitely avoid long-term sole agencies at all costs.
Well, I couldn't agree more with that. I totally echo that advice. Just don't even countenance a long period, 3-month or more lock-in. It's just out of the question. I think a lot of first-time sellers are under the impression that their property is worth whatever it's worth, no matter who they instruct. Now, I think that's an unconscious assumption that they make. What I tend to say to people is, your property might be worth what it's worth. That doesn't mean that's how much you'll get for it. And how much you get for your property is more down to the choice of agent than any other single choice you make. So, I mean, as a former estate agent yourself, how important is that choice of estate agents?
Yeah, it's all about the professionalism of the estate agent. There are a lot of estate agents who really are box shifters, and what they care about is turnover. And if you've got a house that is worth X, and you've got a commission rate that is very low, then the interest, or the skin that the estate agent has in the game is consequently low as well. And so
Right.
you're not going to find that necessarily they're going to be trying to achieve the best price for your property. You might save 0.5% on a commission rate, but lose several £1,000s on the sale price because the estate agent isn't really
Right.
doing their best to find a buyer. So I think that the choice of estate agents is critical
Yeah.
to the successful sale of a property. Any that can find buyers for properties, I could sell every house on every estate agent's book by going down to the local pub, and offering 50% of what they're actually worth. It's the professionalism is about achieving the best possible price of the client, the vendor. That is the estate agency, and that's what it's about. But at the same time, the estate agent must take very good care in making sure that the price that they're advising is an achievable price. So it's not about advising a very high price in order to secure the instructions. It's about advising, giving good advice about what a property is actually worth, and then actually achieving that. That is what a professional estate agent does. They don't overvalue, they don't undervalue. They try and get it right. And is the trick really is to make sure that the estate agency is trusted by the client to get it right. If you can do that, then if the estate agent can do that, then he's hopefully going to benefit everybody.
Okay.
In the there's no point in overselling.
No. Well, I mean, it brings you on to my next question. If I could ask you, give you a hypothetical example. If I was a first-time seller, and broadly speaking, the consensus of the value of my home that I need to sell quickly is £250,000, the ballpark, what would you advise me in terms of the pricing strategy to achieve a quick sale? Okay.
That's a difficult figure because I don't know these days what the stamp duty thresholds are. But if the stamp duty threshold would make a difference to it, I'd be, if you had. So did you say you would have to achieve £250,000?
No. I'm saying that I have to sell. I've got no choice, but I need to sell my property. Let's disregard stamp duty. Let's pretend that's not a factor. But what I'm saying is I'm giving you a typically average priced property. So let's say a 3-bedroom semi-detached house with a garden for £250,000. But in the coming months, the market pricing is going to be sliding, and everyone's going to understand that the market is sliding. So the question is really, how do you ensure that you get the fairest price in a sliding market? So when you bring it to the market, how do you, in terms of the pricing strategy? Yes, I think presentation is very important, obviously, but get it priced just right, so you're not underselling it, but also you don't pitch it so that actually all the buyers are going, well, that's too expensive, I'm not even going to ring up about that.
Yeah, what the best way to achieve that at the moment, assuming that the market is on its way down, there would be a lot of benefits in not adding a large margin to what would be a realistic price of the property, but by adding a small margin to allow for some negotiation.
Right.
But if you add a large margin, then you're going to be stuck in a couple of months' time if the market doesn't rise up to that level. So then you'll be on the slide, and you'll be chasing the market down, and that's essentially what happened in 73. People were reducing their price about 2 months after they should have reduced it, and that the consequence of that was that they ended up getting much lower prices than even they had worried that they might get.
Okay, so it's bite the bullet early.
Yeah, you've got to find it. What you do is you watch the media, particularly those talking about house prices. You don't necessarily listen to building societies or land registry because they're reporting what happened 2 or 3 months ago. You listen really to the portals and what they're saying about prices.
Right. Yeah.
That because that would be a much more up to date, contemporaneous advice that you're getting. So you've got if they're starting to talk about prices falling, or many more houses coming onto the market, then that, I would say, would be the tipping point. And once you reach a tipping point, it becomes quite nasty. So
Right.
you've got to really bite the bullet and not mess around, because otherwise you'll end up getting a lot less than you thought you would.
Well, that was going to bring me on to my last point, which is that I don't think we've had the spectre of negative equity since the early 90s. There definitely was there. I mean, negative equity is a phrase that perhaps a lot of homeowners haven't even heard of before, but they need to, because I understand. Yeah, it is a situation that the potential may exist for that, and negative equity is a nightmare for everyone, buyers, sellers, and estate agents, because if I'm right, memory serves me right, a negative equity situation is you're stuck in a home that you can't afford, and you can't sell it because it's not worth what the mortgage is worth anymore. You can't sell it for high enough prices to clear your mortgage, let alone have anything left over afterwards. And I think that's another, to go back to your excellent point about, in the 70s, people were reducing their prices 2 months later than they should have, and by which time they'd missed it, and they ended up selling for much less than they would have done if they'd accepted a reduction earlier. That's the scenario to watch out for if you're a first-time seller, isn't it? And you need to sell, because there are people who've bought in the last 6 months with 95% mortgages. Right? They've got 5% equity in their property, and if prices come down 10 or 15%, they're going to own a property. Now, if they can afford their mortgage payments, they've just got to write it out, haven't they? But if they can't, then they're facing the true worst-case scenario. And if I'm right, is it not the case that in a mortgage default scenario on a property, even a bankruptcy doesn't get you out of the bank's losses? And I think I've come across someone that had that scenario where
I don't know about that. You can't get blood out of stone, but it might well be that there'll be something on your credit record for a very long time. I'm sure there would be.
No, I remember a story of someone, the bank came back to them 10 years later, even though they'd been bankrupt, and able to get to come back to them and get the money that they'd lost on the sale of their house. So I just think the message is to just be aware of the risk of negative equity, and don't inadvertently find yourself in it because you didn't drop the price enough when you needed to get it sold.
Yeah, I think the best advice there really is to say that there probably isn't going to be a white knight coming along on a horse to rescue you, and that if there is going to be a decline, it will be a decline that will last for a year or possibly two. It's we talk about boom and bust, but then you get boom again, and prices then start to go up. Usually, it happens because of messing around with interest rates, or something else that the government does that causes it. It puts it outside of your control and outside of the estate agent's control, and you end up with things happening that you wish didn't happen. We had it at the end of the 80s with Nigel Lawson, and then in 1992 with the then Chancellor and John Major standing outside of the Treasury office, I think it was, saying, good news. The bad news is that interest rates today were 15%. The good news is now they're 12.5%.
Yeah.
It's not something that comes out in the wash very quickly. So if you find that prices are declining, then you must jump on it, borrow money from family or whatever, and get yourself out of it, because otherwise you're going to end up in a bit of stuff down the line.
Okay.
So you have to keep your eye on the media. Listen to estate agents. If they're telling you to drop your price, then listen to them. I had literally hundreds of conversations back in the early 70s about that with people. And of course, they all knew better. They could quite understand why they wouldn't have to pay as much for something else, but nobody really wanted to accept that they weren't going to get as much of their own property. And it was an infuriating time. I had conversation. I said to people, but you're saying that you can get You can buy another property for less, but you're not prepared to sell yours for less.
Yeah.
It's just
a cake and eating it.
Yeah.
Right, well, John. Listen, thank you very much. I think there's some fairly sobering advice there, but I think it's better to be forewarned is forearmed, and I just hope that anyone watching this who's thinking of selling acts swiftly, finds an agent that they trust, prices it sensibly. And that's a good tip for sellers to know. Make sure that the agent you choose does really emphasize the quality of the marketing. John, thank you very much. I'm going to wrap it up here. Thank you very much for your time and advice, and all the best.